The US dollar is expected to weaken over the course of the year, said Philip Wee, a senior currency economist at DBS Bank. Instead, we will see the rise of the Chinese yuan as the US dollar loses its luster in the second half of 2013.
The US is not ready to return to a strong dollar, and that the focus really has to be on the growth engine of the world, and we believe that is China. As we move along the year, we're going to see more focus from the G20 in terms of cooperation and coordination to get this global recovery back on track. And China is going to become more important in the equation. I think focus is going to return really to the renminbi appreciation again.
Mr. Wee was speaking to more than 600 participants at the second Sunday Times Invest seminar on Saturday. Concerns over trading in the foreign currencies came out tops among investors who attended the seminar. During a panel discussion, he surprised the crowd when he gave his prediction on how much weaker the US dollar will be.
Let me tell you where my forecast for the Sing dollar is at the end of this year. It's 1.19. Wow, right? Yeah. Okay, when you compare to the end of last year, it's actually only a 2.6% appreciation. Okay, bear in mind that the Sing dollar currency, we use it to manage inflation. The official inflation forecast 3.5 to 4.5. I've actually put it lower at 2.6. So no doubt, the dollar Sing has gone from 122 to 125, but we're still in the lower half of a channel, which means that as long as we stay there, that the growth story in Asia is still intact. But going forward, I don't expect the same kind of appreciation that we've seen in the last few years, because right now we are trying to cool our economy.
You mentioned that the US dollar will weaken, but I look at the long-term bond yield has gone up. That's always a sign of US dollar strengthening. How do you explain the contradiction?
No, there's no contradiction. After QE1, QE2, QE3, you always see the long bond yields come up. And they will go up to the level, the range where it fell from. This is very normal. Because I've shown you earlier what is QE1 for. Lehman. QE2, Greek crisis. QE3, after the Eurozone crisis. So basically market is running to safety into bonds. Right? So if the whole crisis stabilizes, why do you need, safety? It's risk on, right? So you move out. You start shifting back into equities, which is why equities have been coming up. But what is important to take note is that, the bond yield also focuses on fundamentals. And the fundamentals in US, yes, unemployment rate is down, but it's not down enough. It's not strong enough. Because the US unemployment rate is very important for the US fiscal consolidation. Half of government revenue in US is income tax. And income tax, you don't pay income tax if you've got no jobs. You see, so that's why you see the budget deficit, percentage of GDP, and unemployment rate, they're very close to each other. That's why the US needs, the Fed is saying, I need to bring this down. And QE3, I have mortgage-backed securities. I'm supporting the economy. Okay, the economy right now is facing a drag from the fiscal side. We don't feel it right now because we are looking at numbers in January, February. Remember that in December, in the early January, New Year, there was a deal done on the tax hike. But there was no deal done on the sequester. That's why all the business surveys in US, they are confident that the US economy can stomach the tax hike, but they're not sure about the sequester yet. And the Fed and the Treasury are also cautioning that there will be some pain. And hopefully the pain will be contained at 0.6% of GDP. So the US economy, has so far, yes, they have done a great job holding up the world, during the Eurozone crisis. But going forward, you need China to take over that role.
There was a lot of talks about Aussie being, in regards to their mining industry that's coming into an end. So I'd like to know what will be the implication of this on Aussie dollars, especially that RBA is already putting in a rate at 3%, which is actually the same level as 2007.
I think I like to look at things like, for example, what we have been concerned about last year, the dual economy, the mining, all these worries. And actually the worry is really about China. China was slowing the growth was coming down, and if you plot the Aussie dollar against the Asian dollar index and against Asian stock markets, I tell you the Aussie is really an Asian currency. So its fate is really driven very tight to how we do. So last year, a lot of the concerns about Aussie is really reflections about concerns about us. So I would say that as things improve, as you can see that when China's it sounds like it's turning the corner, it's talking about reforms, you find that the RBA comments have also turned more and more increasingly positive as well. So it moves with China. So if you are bullish China, you can't be bearish Aussie.
In the next clip, we find out why Singaporeans are still obsessed with buying property.